Today marks off one of the most manipulated days the asset has ever faced. Still, the asset was very difficult to keep in lower targets due to the fact that Fed Chair Powell stepped in with a dovish stance. Maintaining interest rates where they are can assist the market with new higher highs. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol FNGR. What is up, you guys, and welcome back to the channel. Let's dive in to ticker symbol FNGR, and we're going to observe this on the 2-minute time frame right here. And I want to just go ahead and point out how much manipulation there was in the market today on the 2-minute time frame, 1-minute time frame, 3-minute. I mean, we were talking about 30-second intervals, 15-second, 10-second intervals all over the place today. So I just put right here a random time frame, right? Let's look at, for example, this is the 2-minute with all the X's marking those iterations. Right here is the 1-minute time frame marking off another iteration here, right? We can go even down into the 10-second time frame where actually one of the subscribers for the ARCa indicators noticed a couple iterations here, right? So these are two other iterations right down there, team. I mean, this was ridiculous. 3-minute time frame right over here marking off another two iterations of that. I believe the 4-minute time frame also had one. Yeah, there we go. And all that just cumulative. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 consecutive strikes of manipulation in the market just today, team, to open up the month the way it did. Very, very interesting times and very manipulated times here, team. So the little voice you heard in the beginning was actually my little boy running into the studio here saying that mama is home, right? So that so he was just, he stepped in here and said, let's go. And he didn't really realize that I was actually already recording, right? So props to the little guy for letting me know that mom was home. All right. So anyway, let's go ahead and go on to the next chart here, team. And just a real quick little warning. I actually potentially will not be streaming in the coming days, team, due to the fact that we have a family trip, right? So we are actually not, I'm actually not going to be streaming, but I will be very well connected and definitely looking over some of the price action as it does happen, right? At least I'll be trying my best, right? But yes, team. So anyway, let's go ahead and take a look at what we have here. Okay, so let's see. Okay, so yeah, we ended up coming back down to the areas of support that we were talking about, right? So this was the zone 535 to 541. I do think that I even had a 532 there, and that was the not 236 of the Fibonacci retracement. So we didn't actually get that 532 touch, but we were able to identify the bottom side targets. Funny how during the live stream we actually had one person starting to come and bully other people, right? They're, where's the buyers at? Where are the buyers at? I'm like, man, it's funny that you're coming here to talk your silly crap when the price action happens and you forgot to notice or watch my video last night saying that we would be in the downside today. My bro, you're not fooling anybody, man. And I hope you're listening right now. I hope you're listening right now because you didn't do nothing. We already had noticed that we were going to get that downside. So what's this? What's this? Round of applause for you, man, for coming in, reacting as the price happens. My dude, come on. You don't know how to trade, bro. Get out of here. Anyway, let's go ahead and quit the stupid talk with this guy here, man. He was funny. He was just super funny, and continue on the analysis, right? But anyway, this was the potential targets that we were looking at as well, right? We noticed that this would be the golden pocket here. We did identify this drop from, I think, up here, right? Yeah, we said that this would be a higher likelihood for us to come back down into the golden pocket. It's like, dude, if you're going to talk your crap and you're going to go into, like we're about to go into this is one of the most bullish areas to bounce out of. Oh my goodness, dude. Like I think you're like blowing your load a little too soon, don't you think, man? This is not a good area for bears, bro. Like this is where we bounce, you know? So anyway, yes, we have a pretty nice recovery here, considering the fact that we dropped to 536 and came all the way up to 560. That's ridiculous, you know? and it is in respects to bouncing out of the golden pocket, which is located between the knot 382 and the knot 618 Fibonacci retracement ratio. Okay, so please, man, come at me, bro. Let's do it. Right. So anyway, so this was actually the live chart here where we were starting to count every strike of manipulation as it was happening, right? Just ridiculous times here. But even still, the asset was still able to recover and make an upside. Just, I mean, man, this is, guys, if you're bearish this asset, if you're a short on this asset, this is probably not the best time to do it. First of all, please notice what the damn SPY is doing over here for us, man. Look at this, right? We were already speculating the fact that we were going to get a massive run up on the SPY. We were already looking at a resistance level of 423.95 to 424.53. And guess what, man? We just came very shy of that target. Our speculations are meeting directly in pocket here. The dovish stance from the Fed means that they're going to rally the freaking markets, man. And you know what happens when the markets rally? Other tickers rally too, man. So where the buyers at? All over the place, man. Oof. All right. So if we do have some more accumulation, I would encourage it because that would encourage more bulls to get into the asset and run this thing to the real targets that we're all waiting for, right? But yeah, team, please know that I still do not have an open position on FNGR as my positions are liquidated except for the one ASRE position. So complete transparency here, team. I have liquidated my positions on everything except that one ticker because I am moving on to DAS Trader and I am opening up with a new broker. All right, team. So let's go ahead and now take a look at the hourly time frame linear regression channel here. And I would like to point out a very, very important fact. The fact is that we closed upside of this mean band. And you guys already know what happens when we close upside of the mean band, right? Yeah, that's definitely right. That's definitely right. A bull case is presented. All right, team. So if we are going to be looking at upside targets, first, naturally, we got to come back down to validate that support, right? 558. We're currently at 560. If it does drop any further, sure, we can touch down to 551, still be safe. Get that upside run here. And the resistance ranges that we are looking at, team, still within this realm here. 575 to 580 could be in the cards for tomorrow's price action. So I would encourage you to please be very careful as I will not be streaming live and I won't be able to mitigate through this, right? So I need you guys to be super, super careful. Next thing to look at here, team, is the potential breakout from this ascending triangle here in the hourly time frame. I know we're probably going to see another chart here where it did have my drawings, right, for the ascending triangle. We were already speculating a potential upside on this and speculating the downside for the support from this. My goodness, man. People got to pay more attention instead of talking all that crap, bro. Too much silly talk here. All right, so now if we apply this topside target to the price action here, that is actually telling us that we would reach where? That's right, to the resistance to the resistance range of the mid band from the linear regression channel. Nice rhyming there, I gotta admit myself. Now, the second target to look at is, of course, the center of the triangle, which could arguably be right about here. Right, we'll take that trend line all the way down there, and let's apply it to the breakout zone, which would be, I mean, obviously right there, right? And guess what that's taking us to? Yep, that is taking us to 574, which is naturally correlated to that 575. And to be honest with you, let's see. Actually, let me highlight this channel. It is definitely 575 with a suggestion of a psychological target of 574. Yep, I do see price action continuing on to those targets there. So, and now looking at this on a daily time frame, the pullback that we actually got here was back down to the 2 spot 618 at 544. Right, of course, it went down to 536 or whatever, but yes, it was the 2 spot 618 that was responsible too for having us pull up to the upside. A little bit of a danger presented here on the daily time frame, as this is in all reality. I guess I would really like this candle to have printed up a little higher to be considered an evening star, but that's it would be a bearish candle, right? So, and this would be the candle to validate that continuation to the downside. Now, the fact that we did close at 560 after hours means that we are at the let's see, 2 spot 272 at 565 for resistance. So that, yeah, I think we could get a short-term time frame upside to 565. Another 5 cents up from the after hours close, then come back down to the areas of around 544 to maybe 537, and then we shall see how price action will continue. Now, please do remember, team, that we do have some lower targets down there to also keep into consideration in respects to other charts that we have, right? So another thing that could be signaling a potential drop here to the 540 to 531 cent zone is the fact that on the daily time frame, Gaussian band, we closed right beneath the mid band, right? Look at that right there. We closed right below it, which generally would be a bear play. Right, so this, yes, we still have supports to look at 531 to 540, yeah, team. So let's just go ahead and talk about those for now. But if we did drop any further here, then there could be drop down to 516 to around about 522. All right, so that could be a secondary backup support for us to use for a continuation to the upside. All right, so let's go ahead and move on to the next chart and see what else we have. Right, nothing there. And this is so far what we're looking like since the start of the new month, right? So this was the previous month closure, and this is what we're looking at now, team. Yeah, I mean, relevant supports are everywhere, but still, we have to make sure to prepare for such things, okay? So now let's look at the last part of the analysis here, and this would be the RSI 30-minute time frame. A little bit of consolidation here. I have to admit that it is very close to the gravitational zone, which could send price action to the upside. And this is the bi-hourly time frame, which is pretty much validating that potential pullback that we're getting. So run up to 565 initially, then get a pullback here based on this gravitational zone and the SMA 14 resistance. Next thing to look at here is the 4-hour time frame, also giving validity for that pullback as well. Now, as far as the 8-hour time frame and the 12-hour time frame, you can clearly see here that they're already bouncing to the upside from a fall and using the SMA 14 as support, right? Like this in here too. So this could be indicating that the short-term downside is in fact a short-term downside, and we would be bouncing to the upside and continuing based on these two time frames, the 8-hour and the 12-hour. Okay, so the daily time frame, please remember that this has not seen the after hours activity where price action essentially went up to close from 553 to 560. So that means that this daily time frame RSI could already be bouncing towards the upside, and it could be presently or very close to a daily resistance at that SMA 14, which would then validate yet again the 4-hour and the bi-hourly time frame resistances coming up. We will talk about the 3-day and the 5-day as soon as we start getting some harder pivots or more of a substantial pivot to the upside based on the shorter time frames. Okay, team. So that is, I think, pretty much it for the analysis here, right? So one more thing to point out, team, is just I guess this would be probably the last call here, as I do think I have already filled every single seat, and in fact I may be over for the ArcMasters course, and this is going to be a 16-week mentorship. Please go ahead and get in touch with me there, and definitely know that this is going to be starting on November 11th between 9 and 10 a.m. For this course, right, team? So please definitely get in touch with me there. If I can fit you, I can fit you, but if I can't, I will let you know about the upcoming one after this one, because a lot of people are already asking. There's already 5 or 6 people on a waiting list for the next course that could be open in tandem with the original course. So meaning that this original course is going to start first, and then the second one could potentially start like 3-4 weeks later. And that way we can get another group of people there. But I really want to, I said initially 6 or 7 people, but I think it would be best if we can confirm 10 to 15 people for that next one, and then start this one in probably 3 to 4 weeks after the first one starts. Okay, team. So yeah, you know the risks, you know the upsides and downsides and probabilities here. So yeah, I think this is a pretty good place to leave off, right? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good night, and I shall catch you at the bell on Monday. Please remember, adios. Yeah.